Hey traders, Scott Barkley with ProAct Traders. Some of my traders in my live class were struggling with price action, so I asked ChatGPT to give me what are the main struggles traders have with learning it. Brought back quite a few information, so enough that I thought maybe I ought to do a whole video presentation on this. So this is going to be a series of short videos to help you through the process of learning what price action is, how to use it, how to solve the problem in your own case, and how to become a better trader. So let's get right into the video. So this first lesson is on struggles with learning price action, understanding market psychology. Okay, so this is from ChatGPT. Price action trading relies heavily on understanding the psychology behind price movements. Traders must learn to interpret market sentiment, which can be subjective and complex. Okay, so let's change the words from psychology, market sentiment, to agenda. Bankers, that's the big boys, manipulate the market. They can't control it, but they can manipulate it. There is always an agenda. Big boys must telegraph that agenda to all knowledgeable traders worldwide. Interpreting market sentiment is really a fancy saying for how are they going to manipulate the market to meet the agenda. If the market was random, we would not be able to ascertain what any pattern might be telling us. It would be so random that any outcome would certainly have to be a guess. Yet, we know that patterns have predictable outcomes and represent a part of the agenda or market sentiment. So market patterns have high probabilities. Example, an ABC pattern. These are a corrective pattern to pull back to find buyers or sellers, depending on your direction, to continue the move. In other words, there's a reason behind the big boys executing this pattern. That reason is the agenda. Everything in the Forex is about continuation until the agenda has been reached. So let's look at a few. So here's ABCs, all right? So you can see the ABC over in the left and then in the middle and then there. Now, that's a corrective move to continue the agenda. What was the agenda? Go to the upside, all right? You can even see that they continued the move in 5 waves, all right? There you go, right up to the day chart top, which is the pink line on the top. See, so the agenda was go to the pink line on the top. How did they get there? Well, they can't go straight up to it because they run out of buyers or sellers. So the ABC pattern gives them a way to tell everybody we're going to continue, but we need to go find the buyers in this case. So market patterns have high probabilities, and another example would be bear or bull flags. These are a corrective pattern to pull back to find buyers or sellers, depending on direction, to continue the move. In other words, there's a reason behind the big boys executing this pattern. That reason is the agenda. Everything in the Forex is about continuation until the agenda has been reached. So let's look at this one. All right, so you see the bear flags there. Bear flag, bear flag, bear flag. What did it do? Continue the agenda, which was to the downside. How do we know that? Just look at the moving averages and you know you're going down. All right, so see how in each case the corrective pattern, although it went against the move, actually continued the move. That's the agenda. So why do traders struggle with this? Because they think this is psychology and out of a trader's control, instead of an agenda to continue the move. By the way, all pullbacks are part of the agenda, and many traders bail as soon as they see it coming back on them. So what is the solution? The serious trader will take each pattern separately and study them to understand the statistical probability of what they are seeing in the charts. How many? 300 of each pattern, all done at once. Then the trader takes 24 hours off so that their brain can build the neural highway to the folder with that pattern in their brain. This is how your brain processes information. If you don't do it the way your brain processes information, you never get it. And traders violate this simple process all the time, and so they never get over that fear. So here's a trader's work so you can see how to do it. And you can see down there, we got, all right, with the bull flags, I got them highlighted, okay. How many of them worked? 91%, all right. Did 300 of them, remember, 91% worked. That means only 9 out of 100 did not. You see 9% there, all right? Did they do the pull and the exit? 91% did. Did they do a break, hook, and go? 86% went. Then he has which fib they pulled back to go to, all right? So you can make it fancy like that if you're an Excel spreadsheet person. Or you can not get fancy and just do it on a piece of paper. Here's a trader who did it just on a piece of paper. What did he find out? It's his pullbacks, all right, retracements. So he found out that 91% of them go to the 618, all right? If there's a pullback, 91 of them are going to go to the 618 fib, the 1.618 fib extension. This is what you learn when you do the work. Armed with the statistical validity of their study, they now know that when they have the statistical value of what they're looking at, they can make the right judgment call on the trade they're hoping to execute. If you knew, for instance, that pullbacks 91% of the time will travel to the known target, will you be scared that this is the 1 out of 9, the 9 out of 100 that will not work? No, all right? You will accept that 9% won't work as a part of normal trading. Traders don't do the necessary work to become a trader, and that is why they gravitate to indicators instead of price action. But no big boy uses indicators. The big boys who move the market trade price action. To trade with them instead of against them, you must learn price action. Key number 1, commit to the work it takes to become a knowledgeable trader. More lessons to follow.